For years, viewers were shown one version of this family, a carefully shaped story that never quite added up. But behind the scenes, a very different truth was being documented, line by line, dollar by dollar. And when that truth finally entered a courtroom, it didn't just challenge the narrative, it shattered it. Stay with me, because what was revealed next changed everything, and no one saw it coming. For years, there was a story the audience never truly heard, a version of events buried beneath edited scenes, soft background music, and carefully framed conversations that always seemed to stop just short of the truth. But behind closed doors and sealed documents, another narrative had been forming, one built not on emotion, but on records, timelines, and undeniable patterns. According to insiders, when this case finally reached a courtroom, it was never expected to unravel the way it did. What began as a quiet financial dispute slowly transformed into a moment of reckoning that no amount of narrative control could contain. At the center of it all was Mary Brown, a woman long described publicly as distant, disconnected, or disengaged, yet the documents told a very different story. From the very first day of testimony, it became clear this was not about personal disagreements or emotional distance. It was about contribution and exclusion. What Mary's legal team revealed was not opinion or speculation, but years of financial documentation compiled into a single devastating timeline. Bank statements, digitized spreadsheets, tax filings, and internal transfers were introduced, not all at once, but deliberately, each piece placed with intention, building tension and clarity at the same time. The strategy was precise. They divided Mary's financial life into phases, each one tightening the focus and raising the stakes. The first phase took the court back to the earliest years, before fame, before production money, before expansion. During this period, records showed Mary earning steady, reliable income while the family struggled to stay afloat. Pay records demonstrated that her earnings flowed consistently into shared accounts, supporting daily expenses, housing, and basic needs. There was no evidence of withdrawal, no sign of disengagement. Instead, the documentation showed discipline, consistency, and quiet responsibility. This immediately disrupted the opposing narrative that Mary had somehow faded out or failed to contribute. The numbers showed the opposite. She had been a stabilizing force during the most uncertain years, a role that had never been highlighted publicly. The second phase marked a shift in tone and tension. As the family moved into a period of growth, production obligations increased, lifestyle expenses expanded, and financial complexity deepened. This was where the courtroom reportedly became still. Transfers that had once been described as communal were traced carefully, showing a pattern that benefited one household disproportionately. Funds originating from Mary's accounts were shown covering mortgage payments and asset-related expenses tied to Cody and Robin. The defense attempted to frame this as shared family decision-making, but the documentation told a more focused story. Each transfer aligned with benefit flowing in a single direction. This was not about one transaction or an isolated incident. It was about consistency over time. The legal team emphasized this point repeatedly, asking the court to look at the pattern rather than the explanation. As the questioning continued, the tension built slowly. Mary sat quietly while the numbers spoke for her. The third phase moved into the most symbolic territory, the land itself. Coyote Pass, a property described publicly as the future of the family. Records showed Mary contributing significant funds towards its acquisition, yet her name was absent from any deed. When asked to explain this absence, testimony relied on future plans, temporary arrangements, and verbal assurances. Yet, when the court requested documentation to support these claims, there was none. No emails, no messages, no written agreements. The silence that followed was described by insiders as heavier than any argument because it reframed the issue entirely. This was no longer about misunderstanding, it was about omission. As testimony continued, emotional appeals entered the courtroom. Discussions of unity, fear of instability, and protecting the family narrative were offered as justification. But emotion struggled to stand against documentation. The turning point came when a financial record was placed directly in front of a witness, showing a substantial transfer from Mary's business account at a critical moment linked to land acquisition. The contrast between spoken intention and recorded action became impossible to ignore. According to those present, the courtroom atmosphere shifted from sympathy to scrutiny. The judge intervened, reminding all parties that while family structures may be unconventional, financial accountability remains grounded in law. This intervention marked a shift. The case was no longer drifting through emotion, it was anchored in fact. As the first phase of the story closed, the audience inside the courtroom could sense what was coming. The foundation had been laid, the patterns were clear, the narrative that had been protected for years was beginning to crack, not through confrontation, but through clarity. And the most unsettling realization was this: if these contributions had been documented so thoroughly, what else had been quietly overlooked? The question lingered, unanswered, hanging in the air, pulling everyone forward into what would come next. As the proceedings moved deeper, the atmosphere inside the courtroom reportedly shifted from curiosity to realization, because what was unfolding was no longer just a financial disagreement, it was a structural exposure. The legal team continued methodically, layering evidence, not to overwhelm, but to corner the truth. Each document introduced connected seamlessly to the last, forming a chain that could not be broken. The defense attempted to slow the momentum by reframing the discussion around intention, belief, and family culture. But the judge repeatedly redirected attention back to records, actions, and outcomes. What mattered was not what had been hoped for, but what had been done. According to insiders, the most destabilizing moments came not from raised voices or dramatic gestures, but from silence. Silence when asked for proof. Silence when explanations ran out. Silence when numbers refused to bend. As testimony continued, Cody took the stand, presenting himself as a decision-maker operating under pressure, attempting to balance multiple relationships and responsibilities. He spoke about shared goals and collective vision, yet under questioning, that vision began to fracture. Transfers were traced, timelines were clarified, and each answer seemed to narrow the space for interpretation. When asked about funds originating from Mary's accounts and ending in expenses tied solely to one household, explanations relied on the idea that money within the family was flexible, shared, and communal. But the legal team highlighted a crucial distinction. Communal use does not erase accountability, especially when benefits are uneven and recognition absent. The court listened as transaction after transaction was aligned with asset growth that excluded Mary legally and materially. The tension peaked when land ownership was addressed directly. Deeds were presented, parcels were outlined, and names were read aloud. Mary's name was missing. The defense described this as temporary, yet when asked again for documentation supporting that claim, there was none. The repetition of this absence began to weigh heavily. It was no longer an oversight, it was a pattern. The courtroom reportedly grew quiet as the implications settled. This was not about delay, it was about denial. Then came the testimony of Robin, which insiders described as emotionally charged and carefully delivered. She spoke softly about fear, uncertainty, and the desire to protect family stability. She referenced concerns about commitment and emotional volatility, framing exclusion as precaution rather than intent. For a brief moment, the room reportedly leaned toward empathy, but the shift was brief. When cross-examination began, the focus returned to records. A single bank statement was placed before her, showing a significant transfer from Mary's account at a pivotal time. The question was simple, yet devastating. How could fear of abandonment coexist with acceptance of substantial financial support? The contrast was stark. According to witnesses, the emotional tone changed rapidly. What had been composed became strained. What had been rehearsed began to unravel. The judge intervened again, directing the witness to answer directly. Did she accept the funds? The answer, though quiet, carried enormous weight. With that admission, the final thread holding the defense narrative together reportedly snapped. The remainder of the testimony felt procedural rather than persuasive. Closing arguments followed, with Mary's legal team presenting a cohesive summary: decades of documented contribution, exclusion from ownership, and a clear pattern of benefit flowing without recognition. They framed their request not as punishment, but as correction, restoration, and balance. The defense responded with references to informal agreements and belief systems, but the contrast between philosophy and evidence was stark. When the court recessed, anticipation filled the room. Observers described the wait as tense. Mary remained composed while the opposing side appeared unsettled. The return of the judge marked the beginning of resolution. Her ruling acknowledged the unconventional nature of the family structure, but emphasized that financial law remains consistent regardless of arrangement. She dismantled the defense's rationale piece by piece, citing testimony and documentation. She described the exclusion as unjust and the acceptance of funds without ownership as bad faith. Then came the ruling. Ownership was granted, compensation was ordered, damages were assessed. The amount, when spoken, reportedly stunned the room. Reactions were immediate: shock, relief, disbelief. Mary closed her eyes, not in triumph, but in release. The ruling did more than shift assets. It altered dynamics beyond the courtroom. In the days that followed, reports surfaced of planning activity on Mary's land. Construction drastically increased. Preparation signaled intention, permanence, and independence. Meanwhile, resistance surfaced, attempts to question boundaries and authority, but enforcement replaced negotiation. This was new territory for those accustomed to control without challenge. The broader family response unfolded quietly. Conversations reopened among those who had shared similar experiences. Solidarity replaced rivalry. Understanding replaced silence. Children watching from the margins reassessed what they had been taught, recognizing patterns previously hidden by loyalty. The narrative that had dominated for years began to dissolve, replaced by documented reality. Analysts and viewers alike revisited past moments through a new lens, noticing inconsistencies and omissions once overlooked. The legacy of the case extended far beyond land or compensation. It underscored the power of documentation, clarity, and persistence. It demonstrated that contribution without recognition does not disappear, it accumulates. And when finally acknowledged, it reshapes everything. As construction moved forward, Mary's focus shifted toward growth and stability. She was no longer descending her past, but building her future. The story that had once painted her as distant now revealed her as deliberate, patient, and resilient. The era defined by unquestioned authority had ended, replaced by accountability, transparency, and consequence. And as the dust settled, one truth became clear. The story had never been about one person winning. It had been about truth, finally being allowed to speak. And once spoken, it could not be silenced again.